With a rich history spanning more than a century, the company has consistently changed and developed to emerge as a world leader in the energy sector. Exxon Mobil has consistently proved its commitment to innovation, efficiency, and sustainability, dating back to the founding of John D. Rockefeller's Standard Oil and the merger of Exxon and Mobil in 1999. Today, the company boasts a vast portfolio of upstream and downstream operations, spanning across multiple continents and supplying the world's growing energy demands. Welcome back to Enterprise Epics. There is a reminder, if you have not yet subscribed to my channel, don't forget to subscribe and press the bell icon so that you don't miss out on any newly uploaded videos. So let's dive into the journey of Exxon Mobil, early years. The company's roots started in 1911 when the U.S. Supreme Court ordered the Standard Oil Company to be dissolved and divided into 34 businesses. 88 years later, two descendants of Standard Oil Company merged to form Exxon Mobil, with the aim to bring back the glory days of John D. Rockefeller's Standard Oil Company. A book titled The History of Standard Oil Company, written by Ida M. Tarbell, exposed John D. Rockefeller's monopoly in 1904. It triggered a public outcry urging the government to take action against the firm. After the corporation was found guilty of monopolizing the petroleum industry, the Supreme Court ordered it to separate into 34 smaller companies. Before the merger, two of these smaller businesses, Jersey Standard and Saucony, would prove to be each other's most powerful rivals. Saucony Company with vacuum oil. While Saucony will eventually become Mobil, Jersey Standard will soon be known as Exxon. Why did the two successors of Standard Oil Company merge? And should we be concerned about monopolies in the petroleum industry? Jersey Standard and Saucony created their own industrial empires after their split, both of which saw rapid growth. Both had benefits and drawbacks, but one had what the other had not. For instance, Jersey Standard lacked a marketing network, even though it owned oil production in refineries. Saucony had refined marketing assets but had no manufacturing operations. Also, from the start, it appears like they were meant to merge again in the future. Saucony joined together with the vacuum oil firm in 1931 to become Saucony Vacuum. In 1933, Jersey Standard and Saucony Vacuum merged their interests in the Asia-Pacific region into a 50-50 joint venture. Then in 1948, both bought shares in the Saudi Arabian petroleum and natural gas company Arab Oil Company, or Aramco. Saucony Vacuum changed its name to Saucony Mobile Oil Company in 1955, and then to the Mobil Oil Corporation in 1966. Jersey Standard changed its name to Exxon Corporation in 1972. The oil tanker Exxon Valdez hit Bligh Reef 10 years prior to the merger. Bligh Reef is a well-known navigational hazard in Alaska's Prince William Sound. The impact caused more than 11 million gallons of crude oil to spill out. Hundreds of thousands of seabirds, otters, seals, and whales perished with a failed cleanup that made it one of the biggest natural disasters in U.S. history. Exxon Mobil. In 1998, Exxon and Mobil signed a $73.7 billion merger agreement, creating Exxon Mobil Corporation as a new company. Exxon was the world's largest energy company before the merger, and Mobil was the second largest oil and gas company in the U.S., making it the largest corporate merger at the time. Environmentalists and consumer advocacy groups objected to the merger before it was allowed, fearing that the merger would fuel a symbol of monopoly and business greed. Both companies were once part of Standard Oil, and merging is similar to reassembling Standard Oil, which was the main concern of the consumer groups. Because of the disaster that was caused by the Exxon Valdez oil spill, environmental groups opposed the merger. However, officials of Exxon and Mobil stated that environmental and health issues would remain their top objectives. However, finally, the merger was approved by the European Commission in September 1999 and the U.S. Federal Trade Commission in November 1999. In 2005, the price of ExxonMobil's stock rose due to rising oil prices. It consequently declared an annual profit of $36 billion by the end of 2005, a 42% increase over the previous year. In 2020, ExxonMobil considered a merger with their rival Chevron Corporation. That was the period when COVID-19 caused a decline in the demand for oil. However, the merger would have made them the world's second largest oil corporation, with a combined revenue of about $275 billion. ExxonMobil is currently among the biggest corporations in the world and the biggest and most successful oil and gas company in the United States. Due to rising oil and gas prices, Exxon Mobil reported a net income of $17.9 billion for the second quarter of 2022. The total revenue soared from $67.7 billion to $115.68 billion. Yes, during a 2022 surge in profits among Exxon Mobil and other large oil companies, partly due to the war in Ukraine, U.S. President Joe Biden criticized Exxon Mobil. He declared that Exxon made more money than God this year. In June 2022, in the midst of record oil prices, Exxon earned $2,245 62 cents per second over the 92-day second quarter, according to CNN's report on the oil giant's 2022 second quarter earnings. Finally, ExxonMobil's ability to remain a worldwide leader in the highly competitive oil and gas industry can be attributed to its innovative approach, exceptional operational efficiency, and unwavering commitment to safety and sustainability. However, should we be concerned that ExxonMobil will have the same kind of power over the energy sector as Standard Oil Corporation did? The short answer is no, as ExxonMobil has no influence over the price of oil. Less than 3% of the world's oil is produced by ExxonMobil, which means that in 2020 it lost $22.4 billion by selling oil for less than its cost of production. What is your opinion on the comeback of the Standard Oil Company through the Exxon and Mobil merger? Leave those all in the comment section below.